So we're back here on the Duncan Duo Show. So I talked before the break about how first year-over-year decrease in the number of home sales according to our stats. December was the lowest number of home sales that we've seen in December in many, many years. And it was the first time in many years that we've seen a year-over-year monthly decrease in the number of home sales and almost a year-over-year decrease in the average sale price, but not quite there. And we're starting to see our market stabilize and shift with some of the things that are happening, government shutdown, interest rates. But I think it's really important for home buyers and home sellers to stop paying attention to 1 and 2 and 3 year ago news and pay attention to this data for how you should act. So home sellers that have gotten this myth that their house is going to sell no matter what, that they can price it whatever they want, that it's going to sell no matter what, that they can hire an agent that's going to do a job for free, all those things that happen when the market's really hot, that isn't the case anymore.
No, and I mean, here's the thing. We're still, I mean, we had a great December.
We're outpacing the market.
Yeah, we have a great January, like double last year. So all the things that we've been saying for months and months and months, the strategies that we've been giving a lot of the sellers and the buyers that we're meeting with.
Are working for our clients.
Yeah, they work. But because it's all about the marketing that your agent's doing for you, making you stand out in the market, and then also pricing your home appropriately for what's going on in the market. So I think you're having a lot of agents that go in and really they're doing a disservice to the sellers by not being realistic.
No, let's be realistic. They lie to the seller.
Well,
okay, so file complaints. They know what their tactic is. Well, they know the house is worth about $250. The seller wants $270, so they yes man the seller and they list the house at $270. Then it doesn't sell, and then 6 months later they lower the price, and then it doesn't sell. Then the seller's mad. And the other part of it that's probably even more challenging is by then, especially if our market's heading in this direction, $250 may not be the price anymore. It might be $240. So it's a bad tactic.
Yeah, and a lot of our sellers, they're not even local because of the way the Florida real estate market is. So then the seller ends up paying for the property to be upkept, higher taxes because they're no longer homesteading the property. I mean, it's a vicious snowball, and it's interesting because not to plug any shows, but I mean, I watch shows like $1 Million Listing and a lot of these other real estate shows, and they're having the same things that their agents are experiencing on the show, talking about meeting with high-end sellers, and the homes are just sitting and the sellers think their home is the best. And that's really, you can't get caught up in that. I think every seller can get caught up in, oh yeah, I know that one sold for $300,000 6 months ago, but mine's so much better, so mine's worth $325, and that's just not the way it is.
It's not reality. It's ego.
Yeah,
it's ego. You got to look at the data. The other part of it that I think is important, kind of bringing in the TV shows and just the advertising realm. There's obviously a lot of companies that have jumped into the market offering to do a job for free. We're going to sell your house for free, or we're going to do it at a discount. You get these big hedge funds jumping into the market to buy houses, and just looking at the data, my opinion is that they jumped on that bandwagon 2 years too late. Our market's shifting now. Now is not the time to take that kind of risk if you're a home seller or home buyer. Just because those business models come and go, they heat up when the market's really hot, but when the market starts to shift, you need really, really, really great negotiators and really, really, really great marketers for your house. And guess what? There's a cost associated with that. Just like why driving the best car or having the best shoes or carrying around the best handbag isn't free. There's a cost associated with getting the best price, and also assurance. People start to get concerned with whether or not their house can actually sell. It's not about a year or two ago, everyone thought their house was going to sell. Maybe they'd hire their uncle's brother's cousin to list the house and get a commission break. But the reality is, in a market like this where we're shifting, it becomes really, really important to hire the best expert. It's going to market the home the best. It's going to price it aggressively and have great negotiators. And I'll say this too. There are always shifts in the real estate market. There are always people that want to come in and change how everything works. But tried and true over time, when a market shifts, people get really, really focused not on can I do it cheaper, but can I do it at all? Will my house actually sell? And let's face it, if someone isn't charging you to do the job, what vested interest do they have in accomplishing that task?
Well, it's interesting how even meeting with sellers has changed over the years. You know, now we're talking about going back to like 2010, 2011, 2012, when a lot of the meetings with sellers went, can my house sell? You know, what's it going to take to sell? Where in the past couple of years it was, you know, my house is the best. How are you going to get me the most money? You know, what am I going to gain for this? So
mentality has to change.
Yeah, so now it's interesting, and usually the market lags the data by several months, 6 months or so.
So people are still going to keep thinking that their house is going to fly off the shelf.
Yeah, but we are meeting.
And there are some that will.
Oh yeah,
we're still selling houses like crazy
absolutely.
for bidding war. You know, when it's priced and the strategy's right, but there's plenty of them that are sitting.
Yeah, and you know, it's all going to be about the seller. And we are meeting with really realistic sellers too. I don't want to give a false narrative that everybody is unrealistic, but it certainly is easier if you're realistic from the beginning, because I promise you that it ends up netting you more money in the end if you're realistic in the beginning.
So you know, a pricing strategy that can work when a market is hot is pricing it high and then reducing it. You know, because if you look at a graph, what ends up happening when the market's hot and prices are rising? If you start high, prices are rising and you lower it once, and then 45 to 60 days down the line, market averages pick up, and then you're a little bit of a price drop, and it puts you in line with getting an offer. It's the complete opposite of that when you have a market where prices start to stabilize or decline. If you start out too high, it's gonna take you longer to get to that price, and in some instances never, because prices might drop enough to the point where when you get to, you know, the price, it's a year or two down the line because the prices are dropping quicker than you dropped your house. So it becomes hugely imperative to price your home appropriately from the beginning. Otherwise, you're just constantly chasing the market down, and you don't ever get in front of that chase to you know, to actually get it sold. So now more than ever, it's super important to price your home right. If you're going to go into a market where things are shifting, it's stabilizing, we start to see prices drop, and you think you're going to price your home, you know, too high, but the market, if not, then we can lower it. By the time you make that first lowering, all you did was get it to where it should have been 60 days ago. You know, the market could move faster than that. I have pricing diagrams from 7 and 8 years ago of what we would show people in a shifting market and how they need to get ahead of that. We're going to start to see that again. If you're a seller, price it right. Don't be greedy. Don't put it above the market and think you can lower it. You're right, you can lower it, and you're going to keep lowering it because the house isn't going to sell. Price it right from the beginning.
Yeah, and it's funny, I actually wrote that down when you were talking. That pricing graphic from 7 or 8
We're
years
gonna
ago.
pull that thing out again.
I wrote it down, I thought I need to find that.
Yeah, we're
again.
pulling that out. Yeah.
Well, I think some buyers too, you know, when a home is overpriced like that and it sits on the market for 45, 60 plus days, and then they drop it, you know, a lot of buyers are savvy too. They'll pick up on that, but they'll also notice that the home has been on the market for a while and start wondering if something else is wrong with it as well.
And that also goes back to low inventory. I mean, there still is low inventory, so the good homes do go quick.
Right.
And when they start to sit there, the buyer thinks, well, why isn't this house that good?
Right.
You know, why hasn't it sold? And it almost hurts you even more. Buyers are really savvy now. It's just the way buyers are. It's the way this generation is. They research everything to death. So they're not going to be fooled by high prices because they know usually what's going on in the market.
Yeah, and the data's out there today.
Yep.
I mean, let's be honest. There's enough data out there for people to do math and figure things out. And the other part of the scenario when you get into a market that starts to show some trends like this, and stabilizing, shifting, whatever you want to call it. You call it a year-over-year decrease in the monthly number of home sales and a flattening of the average sale price year-over-year, which again we have not seen in a while. Did the government shutdown and interest rates have an impact on that? Probably. The impact of which we won't know until we get to the spring and summer. If we see this trend continuing into January and February and March, then we know that, hey, look, it truly is stabilizing. But this is the very first time we've seen this kind of impact on the year-over-year changes in pricing and home values. So definitely something to pay attention to. But home buyers, here's the thing, home buyers, still a great time to buy a house. Interest rates are more important to you than all these stats, and they're down. So there hasn't been a better time. You see a little bit of softening in the market. If you're thinking about buying in the next 6 months, now's the time, because what if rates pop back up? Rates aren't based on the Fed like everyone thinks. They have a lot to do with the stock market.
Right.
And if there's fluctuations in the stock market, those rates could jump right back up again.
Yeah, and I saw, earlier this week that mortgage applications were up 13.5%, which is a huge
Yep.
number.
Yep.
Which tells you that right now rates have kind of dipped back down again. It's a good time to take advantage of that.
And you're seeing a little softening in price.
Right.
And so some of this data is going to cause people to act a certain way. And maybe it is because the government shut down and because of some of the interest rate things. So again, let's see what January and February and March look like. Let's see the impact on sales. And then we'll know for sure whether or not this is a trend or whether it was just a monthly anomaly. But I think it's the beginning of a trend. And
Yeah,
we'll find
it's
out.
a great time for buyers to really jump in with prices softening a little bit, rates decreasing a little bit, which also means it's a great time for sellers that have been thinking about selling to go ahead and get it on the market while there's still, the getting is still good.
Yeah, no doubt about it.